So we want to look at under reading for SAUUSD, Shavyfxhb, good. Wanda has a slight difference in reading when it comes to other brokers. So oftentimes there are certain price action you will find in Rwanda that can actually be of immense benefits to charting that you won't find in other brokers. So we want to use Rwanda and to couple with what we had from the previous one. So let's dive in quickly. We're looking from a September price action where we found an uptrend characteristics in the form of ascending trend line ATL, and the price has done significantly well, pushing up in a very transparent manner. We had an ascending triangle here. In fact, we had a double ascending triangle, and the second ascending triangle cuts across with a strong break of structure. Let's keep it here. It's an ascending triangle. We have another one, and I like to change the color of this one to purple. See if we can make a 10-minute video. And so we had a descending trend line, GTL. Our descending trend line formed a channel, a descending channel. You can see the DTL floor, DTL roof. This is the support supply roof, and this is the demand floor for the descending trend line. So when price formed this descending trend line, it came up with a supply roof and a demand floor. And after a break of a resistance structure at this level, let's put the resistance level. Very important for us to see. So we get to see everything ourselves, how price moved. So we got a very strong touch at this level, and the head price to the upswing. This is a demand floor, very strong demand floor. So when price came here, price got rejected at 2,638. So 2,638 was a demand floor where we had a strong bullish potential to the upside, and price leveraged on it. So after the break of that structure, price came back and retested the ascending trend line. The ascending trend line 8 here has a very strong structure which we call SR. So support become resistance and break of structure. So we have it SR1, SR2, and multiple times SR3, and all we are looking out for, we want to find out a candle that breaks the structure. So the candle that breaks the structure, we pay critical attention to it and draw a clearer direction for whatever it does from the price movement. So we have here our SR because our price is trading above the line. So we come here and we have a breakout from this structure. What structure was broken? A demand floor. It's a demand floor. These are all demand floor. All are all demand floor. So we change the color. It's another color we're going to change. Let's make it a blue line. So this blue line is an ascending trend line acting as demand floor. So price broke this demand floor. This is the candle that broke the structure. So I'm going to label it BO to be precise. This is the candle that broke the structure. BO. So when price broke the structure, it came on retest. This is a retest candle, RT. And when we notice this, I sent a signal. You can go check our previous video where I complained that price has broken out of structure. I complained price has broken out of structure. I complained so many times, and because I know the implication, price broke out of structure, RT, then came down again on a different retest, RT again, you can see it. Then we came again, look at us here, in Monday 21st, look at us again, retest again, Wednesday, and we are coming back. We are coming back again. Look at us coming here again in the zone of 2,000. 778 into 2,780. So I'll tell you something. There are a lot of bearish orders lying on this supply roof. And to be precise, this will be a trigger. To be very, very precise, that would be a trigger at that level. So it is an ATL. An ATL. We've had this structure before, but we looked at it on a more broader perspective. We had a 2 hours chart. Now we are looking into this, that price. Then let's look, what is the probability that price will get to this level? But before we dive into that, we'd like to look at the structure again. When price formed a descending bearish channel with a supply roof and a demand floor, it played around. When price gets to the roof, they sell it. It gets to the roof, they sell it. It gets to the roof, they sell it to touch the floor, touch the floor. One, two, three. And the last touch met a double confluence, which I call DC. Double confluence is when ascending trend line meet a descending trend line. You can see the descending trend line DTL meet an ascending trend line ATL. That was a final buy decision. Most buy decisions never happen in the financial market until it meets a confluence. Majority of buy sell decisions happen on confluence. So whenever there is confluence, is a final decision. This is more active and more important than indicators. Confluence, because it's a real life data, and it has a lot of filter. So we have demonstrated a psychological ascending trend line acting as a support structure. There is no invalidation on this ascending trend line. If we are to clone this descending trend line, because we need a roof, now we have a floor. You cannot have a price without a roof and a floor. For every time you are charting, you need a demand floor and you need a supply roof. Now, all we have here are all demand floor. I need a roof. I need a roof in this channel. This is an ascending trend line. So if I clone this structure and take it to the new high, remember, you can't put it here. This is a current all-time high. If you put it here, it will be a breakout from this structure. And I don't want it at the moment. What I want is price touch the floor, go back to the roof, touch the floor, go back to the roof. Just like we have here, touch the floor, go back, touch the floor, go. So I want a roof. And if we are to go by that, this is the roof of this price. This is the roof. So if we have this as a roof, ladies and gentlemen, this strategy has worked over time. Then we want to measure the height at which price has traveled on touch from this floor to the roof. If we are to measure a touch from here to the roof, this is the touch, a complete cycle touch. Price moving from the bottom, a touch into this floor, and a touch into the roof. This is what we have. We want to make sure that this is accurate. I call it gauging. Let us gauge and see if we are right or wrong. Okay, so we see we clone this floor, a psychological ascending trend line to the current high. You can't put it here. If you put it here, it's going to cut off the price action. So we want price to remain in a channel. If price has to remain in a channel, we want to find the demand floor and the supply roof. And this now becomes my new supply roof. My new supply roof, I'm going to change the color to black, and I will thicken it. We give it priority. My roof need priority attention, and I will make it a zone. It will be a zone where my new bearish order will lie. And I can tell you, the tapping into this box is a sell based on our demand and supply strategy. So this is part of the strategy of the market. So we look out for, so when price moves in this channel, we have a way to design it. Now let us measure and see where we can likely get. Look at price here, on touch here, have not gotten to the roof. Price have not touched the roof. It's still on the way. If we put here on the floor, this is our demand floor. We want to measure from our demand floor to the supply roof. Price have not touched the roof, indicating that gold still have more way up. It's an indication that there is still more trade up. All we are interpreting is the structure of the market. We can have changing bias, but for now, this is what we see. Then we look at the close of Friday, we have not gotten to the roof. So if we open the week, Sydney, into other sections, Tokyo, London, and New York, if we intend to get to this level, we will get to this level at 2,798, almost 2,800. So it will take 2,800 to get to the roof to complete this channel. This is a bullish channel. So I call this a bullish ascending channel. Bullish ascending channel. So this is a bullish ascending channel. So on this bullish ascending channel, you see we have made a whole lot of points on the bottom side, and if you look at it and you want to see it this way, that is fine. If you want to think it's something different, that's fine. Think whatever you want to think. It's up to you. You know. So we have this as a bullish ascending channel, and what makes it ascending channel? We already have for ascending channel. You need a three or four points on the floor, or 3 or 4 points on the roof. 1 point at the bottom can make a channel through cloning. I have here 1, 2, 3, 4, 5, the body of the candle and the last week, and we clone it to get our roof. So this makes a complete channel, and we have measured it from the beginning to the end. So if we are to arrive here, we'll be expecting a price action in this level. We'll be expecting a price action at 2,794, putting us, so we can begin to look at, okay, sometimes because of here, look at the wick, look at the body of the candle. So my zone has covered the wick and the body of the candle. So if we are making estimation of the next likely authentic sell zone, it will be in this format. We also have to give it a zone so that you wait for price entry into the box. So our zone has to be about the same length. Our zone has to be about the same length with our zone on the inclined trend line. The ascending trend, look at the length of our zone. We also have to make it almost the same, because right now the readings are vertical. So the readings here are not inclined. You can see all we have here are vertical reasons, but we are using a strategy that cuts across and gives us the right price action the way we expect it. So what we're going to look now is to see how price will return into this zone. So this is our limit. So anything from 2,786 into 2,794, expect a bearish price action. Expect it from that zone based on the strategy. So you see our zone, this becomes our new sell zone, where we begin to look out for a possible price action. So a tap into this will be a completion of this bullish ascending channel. Look at the channel. Our demand floor has been tested and verified, giving us a long ascending trend line, ATL. Demand floor 1, demand floor 2, SR, they are all the same. Demand floor 3, 4, and we've got 1, 2, 3, 4, 5. 5 giving us a very straight ascending trend line. We clone it via cloning, and we put it to the high. This is a new swing high. You cannot put it here. If you put it here, it's going to cut this off. If you take this, for example, let us say you take this new high and place here, because this is a current high, you are invalidating a channel. This is not how channel is drawn. We don't want this kind of channel. What we want channel is, if we create a bullish ascending channel, the floor and the roof must be accommodated in the channel. You cannot pull out from it. You cannot pull out from it. So it's against the strategy. So based on backtesting, all we have seen over time work accurately is what we demonstrate. So if we're priced to tap here to complete this bullish ascending channel, it will be in the zone of 2,786.53 to into 2,784 into 908. So approximately we can say 2,800. But there are something we need to consider. Then we begin to look at here, close of market, we have a resistance structure. A resistance structure that was almost trying to form a head and a shoulder that got invalidated because of price inability to break the neckline. We were praying for price. This is the neckline of the head and shoulder. If we had a break, for example, let us say we had a break. If we had a break from here, this candle broke here, it would have been a retest and a return to demand floor. But price failed to demonstrate this. So inability of price to break the neckline further push price up, invalidating this structure. So this is no longer a head and shoulder. Now price is forming a W a bullish price action, indicating that price is still going up. That is indication. So because we failed in this, then let us look price now. That price has switched from supply roof to demand. So look at our floor. We're going to change this color. Let's make it to something colorful so it can really reflect in our memory. We want something that will reflect on. Okay, let's look at it. Don't like this not reflecting. Want something reflective. Hmm. Okay, I think black is okay. So we have here, look at here the structure from the top layer before we meet, before we break and go to the new high. We had a support structure here. We had a support structure, a retest, a support structure, a break of a support structure. Price came on retest one, retest two. So let me put that RT code. When you see RT means retest candle. So let's have that here. Let's have it again, a second retest. Let's have it because that is what it's doing. So we have two retests, and the price came, broke that structure. What structure was broken? A supply roof. Break of a supply roof becomes a demand floor. So on break of that, we have now as SR. So what do we have now? A support structure. A support structure, break of a support structure will become resistance. So you see the support structure have gone on to print a new support structure on return of price after price being rejected by ascending trend line with a psychological belief playing demand and supply. You can see the blue ascending trend line. First touch retest after a break of structure from here. Price came here, retest. Before we have first retest, second retest, third retest, fourth retest. And then when price came here, price got rejected. That rejection in price ultimately brought price down to test the demand floor. And on demand floor, because it's a bullish market, yes, overbought. Correction might not really be too excessive. You can always keep the trend. So price came down here, found demand, and moved, but got rejected at this level. Why is it rejected at this level? Then we're also gonna see another break of structure, which we will change the color to red. Let's change this color to red and darken it because we are not the ones responsible for this action. We have here a support structure, break of a support structure. Price came here on retest RT. So I also have to label it RT for clarification and vindication. We have to be clear and we have to be vindicated that this strategy is not complex. It's based on the structure of markets. So price came again, retested it. We had three retests on this line. So you see it the way I put them. Then we have a candle that broke the structure Friday, 18th October 2024. I will place a vertical line on that structure that broke, on the candle that broke the structure. So the candle was broken on Friday 18th and came down on retest. Price is now switching from supply roof to demand, right? Because we look at the structure that was broken, look at the black structure. The black structure that was broken with previous supply roof, now broken, it becomes a demand floor. So on two fronts, price have violated two things. An ascending trend line where it was acting as a supply roof is also on a supply because price is trading below the line. It broke the structure. It broke this one and broke this one. So price returned on a foothold of buy. So now giving buyers a very big advantage. So buyers have broken the first resistance structure and the second resistance structure, putting the market in the hands of buyers. This is what it means. Look at here. You can see here an ascending trend line, price trading below what? Supply. This is a supply roof, right? This is also a supply roof. So when price came here, it broke this structure. On technical, this is double confluence. But because of the buy impulse, that buy impulse didn't take it. Price broke the structure. As it broke the structure, it returns on demand, turning a supply roof to a demand floor. So on that demand floor, price has seen a significant push. So you can see what happened here. Price switch from supply roof to demand floor. A supply roof is broken, it now becomes a demand floor. So when price came back Wednesday, what happened? It bought. When price came back Friday, what happened? It bought. So now this black line is a new psychological ascending trend line. I will hold you responsible. In the future, if we have a breakout from here, I will wait for a retest and sell down. That's what it means. That is what it means on technical. So we'll be looking at fundamental analysis and the rate cut decision. We also look at, as the weeks unfold, we'll be looking at the federal decision of both Australian Bank of Australia. We'll be looking at Federal